So you're breaking up. I can hear what you're saying. Say that again.
All right. Morning, everyone. Let's get going.
Okay.
Sorry about that. All right. Let's kick it off here. Non-event again, U.S. markets. We had a whopping about an 8-point range in the S&P last night. It was quite spectacular. Once again, just seeing volatility fall off of a cliff. The NASDAQ actually did manage to push up higher, creeping up toward the 5,000 level. We're within, I think, handful of points. Was that 13 points or something like that? So most likely you got to expect us to get there today, seeing as how it's the end of the week, end of the month. Very little leadership. We saw big declines in oil prices toward the end of the day. I think we were down as much as 5% on light sweet in the second half of the day. Dropped nicely below the $50 level again. We saw obviously some of the oil stocks and some of the related kind of come off on the back of that. Consumer prices came in more or less in line with expectations. Durable goods was a beat, but it was a slight miss when you take out transportation. Initial jobless claims looked a little bit soft, so I don't think the market's really paying that much attention to those data points at the moment. It doesn't really seem like we're getting anything right now to really drive markets. It seems like the market's really just waiting for a catalyst, something, whether it's coming from the Fed or from one of the other central banks, with something to really give us a catalyst to give us a push. The one thing that is of note and that is of interesting yesterday, I think, if I'm not mistaken, the 2-year yields have pushed back to the highs, which is actually a bit of a flattening in the yield curve, but 10 years have also started to drift back up. We got back above 2% last night. We traded up near 2.02 yesterday, and I think it's significant because I had Yellen come out and speak. It's like the second time that she's come out and she's spoken, and the market's kind of taken her dovish comments, and the treasuries have run, and then they're just starting to drift back softer again. So a drift in that direction is the opposite of what we have seen for the last little bit. So I think the markets are really starting to expect that it is totally imminent now that she's going to raise rates, whether it's in September or whether it's in October or whenever it's going to be. The markets know that it's coming, and it's coming relatively soon. All right. Looking at Asia this morning, everything up on the day except for the Kospi. Shanghai again managing to kind of lead the day, but the gains are benign. We're up 1/3% pretty much across the board. Australia continues to manage to hit new highs, which is quite spectacular because as soft as things are in China and as attached as they are to the Chinese economy, I don't know if it's just rate cuts there that have gotten things spurred for the moment, but bottom line is we're hitting new all-time highs on the index. We're hitting multi-year highs on the Nikkei. We're hitting multi-year highs in S&Ps and the NASDAQ and frickin' FTSE and the DAX and everywhere you look. So we're kind of all running in tandem at the moment. So I think that there's very little separation from markets. Close to hitting all-time highs here as well. Okay, a chart this morning from Charlie Bilella of Pension Partners again. Show markets seeming rather optimistic. Equity exposure increases to 99.2% by active managers, which is literally at the exact top end of that chart. Doesn't really get any more bullish than that, and that I think in itself is a little bit bearish. Maybe one of the reasons why the market's kind of just sitting here doing nothing. No one's looking. There's no catalyst to sell. No real catalyst to take us higher, and guys have kind of gotten back invested again. All right. This morning at the opening bell, we've got Old Mutual. We're looking for 18 pence per share headline earnings. We're also looking for $3.27 billion pounds on the revenue number and 6 pence divvy. All right, so the stocks going ex-div on Monday are Woolworths, Essar, HTCs, and Goldfields. So keep that in mind if you're looking to play any of those today or holding them into the weekend. All right, in market data today, we've got Japanese jobless, had the Japanese jobless rate. Looks like a slight miss. CPI numbers there were dead in line. Industrial production number, maybe a touch of a beat. If we look at here locally today, we've got the trade balance numbers. So watch the rand around 2 o'clock. We've been getting some significant moves around in the currency around those numbers. We've got CPI at 3 out of Germany. And then later in the States, we've got GDP annualized quarter on quarter, as well as Chicago Purchasing Manager and the University of Michigan sentiment numbers. All right, let's get into the maps. First thing that we'll just have a quick look at here is the bond market. I mean, you can see we, like we said, we dropped below 2% on the 10-year yield here. We're managing to creep back higher again. I'm trying to figure out if I can remember how to get to the 2-year. Here we go. Okay, so here's the 2-year. So we are not at the recent highs, but we're getting up close, and we're kind of pushing that envelope here to potentially break out. I think if we get above maybe 65 basis points on the 2-year, that'll give us an opportunity to make a breakout to the upside, and I think that's significant. Treasuries for me at the moment are the most important thing to be watching in this market. It seems we haven't been really attached to anything in the way that the correlations in markets haven't been spectacular. There's not been one thing that's been really easy to follow around lately, which is quite frustrating when you're looking for some sort of leading indicator, some sort of signal. But if I could mention one thing at the moment that is, it always is obviously a barometer of the market, but I think right now the most important thing to be watching is our U.S. Treasuries. All right, let's look at Discovery, which yesterday once again pushed up against and tested this 120 level. Let's just zoom it forward here and have a look. 1, 2, 3, 4, 5, 6, 7, 8 days where we've touched 120 or just gotten a touch above it and failed to close above 120. 8 days out of the last 10 or 12. So 120 is without question obviously the line in the sand. If it gets above 120, we're going to be looking for a quick, probably 5 rand to the upside. So just watch this very closely around this level. That rights issue having zero effect, obviously, on the share. All right, ShopRite. So we showed this chart a little while ago. I just wanted to come back and show it this morning. This 172, I believe, was the level. Yeah, 172 on the neckline of this head and shoulder, and this thing is just played out beautifully. I didn't get on it, which really pisses me off, and I'll point it out and don't freaking get involved. And then it plays out. But it's playing out beautifully here. I think we've got just a little bit more on the target here. If you're going to run this thing from the close on the breakdown, we're looking for $16 at downside, which would take us down to 156, which is down around these sort of levels. If you're taking it from the intradays, and then we're looking all the way down close to 150, 150, somewhere in there. So this definitely looks like there's still a little bit more meat on the bone, but not necessarily a whole lot more. All right, let's look at Foschini Group. We had a big correction in the retail space over the last couple sessions, I think maybe on the back of the budget announcements, and maybe things getting a little bit tighter for some of the consumers. On the back of that, taking money out of the consumers' pockets with some of these extra tax increases, especially of the fuel surcharge and things like that. At 162, you can see we managed to survive yesterday in terms of closing basis. If we get below that, I think we could have a nice correction here, maybe even fill the gap to our breakout point, which is about 148. So just watch that level over the next day or two. We also had, this Truworth, which is filling the gap. On its breakout that happened around from about $88, right around there, $88. We kind of basically got down to that number yesterday, managed to close up a little bit, but I think we're seeing a little bit of support there as well. All right, the last couple I'm going to show you is just for the shorter term guys, Billies and Anglos, and I wanted to actually just show, and this is what one of the things that a lot of us really active guys are looking for is clues into what's going to happen, and so we're going to look at patterns here. This is a 5-day chart, so I'm actually just going to cut out anything. I'm going to cut out the everything except for the last 3 days. And what I wanted to show here is okay, so here's the open on Wednesday. You can see us, we pushed higher, kind of drifted down for the beginning of the session. What I wanted to show is as we came into the U.S. Open, look at that time period there, how hard the selling came in, right at 4:30. I mean, end of the day, we absolutely bombed out. Yesterday, same thing, we pushed up early in the morning, drifted down for pretty much the entire day. We came into the end of the U.S. session, again, selling off quite hard as we got closer to the U.S. session. This doesn't look nearly as good on the 5 minute as it looks on the 2-day. So here you go. So obviously you can see how we sold off hard. Here at 4:30 again, we really got hammered there. That's a little bit more clearly defined. Let's look at Anglos as well. Same sort of thing. So you can see here at 4:30 the selling really comes in intense. They pound it down. I mean, we're coming 2% basically off from that point. And if you look at it and you go back in the prior days as well, you can see here. Sorry, let me just zoom it in again. It's a bit messy when we try to look at it like this, but you can see again, here's 4:30. Look at the way that the Anglos dove off a cliff here into the end of the session, run up yesterday early in the morning, drift down the whole day again at 4:30, gets pounded again. So we've seen this pattern for a few sessions now, and in the diversified miners, obviously it's been all of them across the board, but these two in particular I think have been interesting. Watch for it again today. Once we've had these push-ups in the morning, we kind of drifted lower the whole day. As we get to the U.S. Session, there's some real heavy selling that that has been coming in, and I think that's we've got to look for it again today. That's it for today, guys. Thanks a lot.